All right, let's get right into it. Today, we're taking a deep dive into the technical story of the stock ASST. And what a story it is. We're talking about a company that has seen a truly dramatic fall. And now, well, now it's sitting at a fascinating and you could say a very pivotal moment. And that really brings us to the million-dollar question, doesn't it? The question anyone looking at this chart has to ask themselves. When a stock takes a nosedive like this, is it a golden opportunity? A chance to scoop up a bargain before it rockets back up? Or is it a trap, just waiting to lure you in before it falls even further? That's exactly what we're going to unpack today. So to really get a sense of just how big this collapse was, let's look at the peak. Just within the last year, ASST was trading at $13.42. Go ahead and burn that number into your brain. Now look at where we are today, $1.46. Wow. I mean, that is a massive, massive haircut, and it's the entire reason we're even having this conversation. That journey from over $13 down to here has been absolutely brutal for anyone who held on. So what does all the data actually tell us? Well, the bottom line from the analysis is this. AST isn't dead in the water, but it is definitely not out of the woods yet. It's in what you'd call a fragile, very early stage recovery, and it's perched right on the edge of a critical turning point. This is the definition of a high risk and, yeah, potentially high reward situation. To really get to the bottom of this, here's our game plan. First, we're going to define exactly why this stock is at a crossroads. Then, we'll look at the technical tug-of-war happening between the good signs and the bad signs. Third, we'll pinpoint the exact price levels that have become the battleground. And finally, we'll map out 3 possible futures for where this stock could go next. Okay, let's dive into part 1. To really understand why this stock is in such a delicate spot, we need to look at 2 key numbers that kind of define its personality, its volatility, and its risk versus reward profile. First up, we've got beta. Now, the easiest way to think about beta is as a measure of a stock's temperament compared to the rest of the market. ASST's beta is 0.761, which is considered pretty moderate. That means it's not a wild roller coaster ride, but it's not a sleepy, stable stock either. It's got a pretty average level of market risk. Now, here's where it gets really interesting. The risk/reward ratio. At 0.978, the potential upside is almost perfectly balanced with the potential downside. I mean, think about that. It means for every dollar of risk you might take on, you're looking at just under a dollar of potential reward. This razor-thin balance is what makes its current position so compelling, and honestly, so nerve-wracking. So let's see how this balance plays out in the data itself, because what we're seeing is basically a technical tug-of-war, with some really strong forces pulling this stock in completely opposite directions. And this right here perfectly illustrates that conflict. On the one hand, the bullish side, we're seeing signs of what's called cautious accumulation. That's where some indicators suggest smart money might be quietly buying in before everyone else notices. Plus, a key momentum indicator is showing that the downward slide is, losing its steam. But on the other hand, the bears have a strong case. The price is still way below its historical averages, and the dominant long-term trend is still pointing firmly down. It is a classic standoff. And this chart really, really drives that bearish point home. Just look at the massive gap between where the price is today at 146 and its own recent history. The 100-day average is nearly $4. The 200-day is over 3. For the bulls to actually win this thing, the stock doesn't just need to climb. It needs to overcome the heavy weight of its own past. So what's the trading volume telling us? Think of it like a crowd gathering for an event. We're seeing a moderate increase in volume, and the money flow index is at a pretty healthy 70, which suggests more money is flowing in than out. But you're not hearing a roaring cheer from that crowd just yet. We're not seeing that strong, high-conviction buying from the big institutions. And that tells us that while interest is definitely building, the real heavy hitters are still standing on the sidelines, waiting for more proof. This brings us to the real climax of this whole technical story. The specific price points, the exact numbers where this tug-of-war is going to be won or lost. These are the levels that matter most right now. First, we have the ceiling. That's at $1.59. This is the key resistance level. For this recovery to be considered the real deal, the stock absolutely has to break through and hold above this price. It's the first major hurdle. And on the flip side, we have the floor at $1.45. This is the critical support level. Think of it as the line in the sand. If the price falls below this, it's a huge signal that the bears have taken back control, and this whole recent bounce might have just been a false alarm. So here's the most important point of all. The stock is currently trading in that tiny, razor-thin margin between the floor at 145 and the ceiling at 159. It is literally squeezed between the level that signals renewed weakness and the level that signals confirmed strength. That's why we call it a crossroads.
Okay, so given this incredibly precarious position, the analysis lays out three distinct potential futures. Let's take a look at what could happen next and the probability that our source analysis assigns to each one. All right, the most likely scenario with a 45% probability is what's called consolidation. This is where the stock just kind of goes sideways, bouncing between those key levels as it builds a new base. The next most likely, at 35%, is a full-on recovery. That's where it finally breaks above that 159 ceiling, ideally with a big surge in trading volume. And the least likely, but still a very real 20% possibility, is rejection, where it fails, falls below the floor at 145, and signals a return to bearish control.
And this quote from the source material just sums it all up perfectly. The situation looks favorable, especially for patient investors who can stomach some risk. But, and this is the most important part, the keyword is confirmation. This analysis isn't a prediction, it's a map of possibilities. And that map requires confirmation from the price and the volume themselves.
And that really leaves us with a final question that goes way beyond just this one stock. When you're faced with a situation this balanced, this perfectly poised at a crossroads, what do you value more? The patience to wait for that confirmation of a recovery, or the protection you get by avoiding a potential rejection? It's a fundamental question every single investor has to answer for themselves.